All right, folks, here we go. It's a Saturday session, December 2nd, 2023. Cannot believe that we are already in the last final month of December. Plenty of activity that came in here to finish off the month of November. Gold, its highest monthly close ever in its history. Bitcoin pushing, just broke above 39,000 this morning, and now we're already pushing towards 40,000 Bitcoin. I am going to be taking a look at a little meme coin today called Jesus Coin. And we're going to just take a look at that along with the broader market. I got an article here from Bloomberg talking about all of the meme stocks, the meme community back in action, pumping it again. I made a little joke I dropped a little video on Twitter here before I started up this live. And I said, what's the difference between Bitcoin and Jesus Coin? Or no, what do they have in common? Well, they're both a meme coin with a very passionate community. Do they have any utility? Absolutely not. But as you guys know in the crypto space, that doesn't stop a coin from pumping. Bitcoin pushing towards 40. Jesus Coin, after dumping 60% yesterday, has already rallied and recovered about halfway back up. So I'm going to show you guys that one here shortly. Putting out the message that we're live now on X, Saturday session. Thank you for stopping by. So where we're at with this thing is everything can be found at my website, zachrector.com. That includes all of our community resources. That includes precious metals, crypto exchanges, wallets. If you want to buy some private equity, we got the link for Link2 down below as well. If you are new to Link2, accredited investor, you sign up with them. Using my link, you will receive $500 towards your first investment. So take a look at that. That's my spiel. And let's get a Saturday session rocking and rolling. Need to refresh the chat. There you guys are. Thank you so much for joining me today. Let's go. So right into the charts, folks. Bitcoin back up 39,430 right now at the time of this recording. This is 2:30 Pacific Standard Time. That's going to be 5:30 Eastern here today, Saturday. 39,400. We pumped all the way up about 39.8, really pushing towards that 40,000 mark for Bitcoin. But we had tapped off this 38K level multiple times, right? And we were looking to get that clean break. We finally got it, breaking through 38, passing through 39, and on our way towards 40,000. Now, for Ethereum, we're back above 2,100 again, 2,163. And for XRP, we're back above 62 cents. Now, I know that a lot of the XRP community is getting frustrated right now. I get it. I'm very sympathetic. It's been years that we've been holding this thing, stacking and waiting to go to the moon. I understand it. But what I'm seeing on the XRP chart is actually incredibly bullish. A massive cup and handle formation that is taking place when you look at it zoomed out over this year. A massive cup and handle formation. Our wedge has gotten so tight. Breakout appears to be imminent. And I'm just asking the question, how much longer will we have to pick up XRP below $1? Let me know in the comments down below. How long will we have to pick up XRP below $1 before we never go below $1 again? That is the reality that's coming for XRP in my opinion. Now into XLM, up above 12 cents here. XLM taking a part of this run up that we see for all of the cryptocurrencies today. Now, the DXY has fallen off back down to 103. Got a little bit of a rally here on Thursday, but that did cool off here once again. And so where we were at compared to last year, the DXY has come down significantly. Taking a look at oil, back down to $80 per barrel to finish off the week. And to finish off the week, that was just epic for silver and gold. Absolutely massive. Silver back above $25 per ounce, and you can see all of these green trading days. This is the daily chart that we're showing you guys, and you can see day after day here, the last couple weeks, just printing green candles. Now the move back up to 25 bucks is just the start though. And for gold, it was the highest monthly close ever at about 2,050 per ounce. And we see yesterday to finish off the week, gold ran up so close, basically about $5-6 away, depending on what chart you're looking at and what data point you want to pull. Some folks were reporting that gold hit a new all-time high. On some charts, maybe it did, depending on who you ask. But relatively speaking, we're right there, right back towards that new all-time high. And this is going to be the quadruple tap, right? This is the fourth time that gold is pushing to this level. So something very interesting to watch right here with gold and silver. Silver has so much catching up to do. You guys know for me, it's been the exclusive metal that I've been stacking. The reason why I partnered up with someone who could help people roll over a 401k retirement account is so that you can do what I'm doing, where on the precious metal side, it's a conservative, safe insurance policy. But then on the other side of our portfolio, we can go take risks. And so that's why I was excited to hear that Link2 will help you roll over a 401k retirement account as well. All those links are down below or at my website, ZachRector.com. And I just want to help people save their bags. And the traditional Wall Street incumbents don't want you to invest in these opportunities. They don't want you to be stacking gold and silver. And even the digital assets, we're going to talk about it later. They want you to invest in their ETFs. They want to make sure that they manage your money, your investments, and get their fees. And so this is something to watch for our community. We've been talking about precious metals. We've been talking about crypto. Private equity is something that is very exciting and something that I am considering rolling my profits. And so my liquid cash I got on the sidelines is for the coming contraction and the recession, the correction reset that's coming for the equities market. That is when I'm going to be looking to go in on the private equity deals and buy that blood in the streets. Now, speaking of blood in the streets, and I'm not going to try to make too many jokes about this, even though meme coins are, relatively speaking, a joke. I did promise one of our community members that I would take a look at the Jesus coin. And so I have taken a glance at it. I have taken a look. I wanted to give it a couple days. And you heard me say a story a few days ago about how I was thinking of buying a meme coin, but the gas fees were going to be like $30. And so I didn't. To me, it is just blasphemy to pay $30 for gas fees. Okay, that's going to be my last joke in regards to the Jesus coin. Is it's absolutely blasphemy to be paying $30 for a transaction in crypto. This is the whole reason why we got away, is not to pay those fees, to be decentralized, and Ethereum just continues to be a joke. So right off the bat, for Jesus coin, it gets a thumbs down for being an ERC20 token. That's the first point. Ding. I can't support anything on this network. Now, I went and checked today after seeing that Jesus coin has dumped about 60% today over the night. Someone came in who sold off about 1.5% of the supply. So they had a massive bag. It was like 1 trillion tokens, and they dumped hard. And you can see it on the chart right here. This thing dumped about 60%, I believe. Let me pull the numbers. Yeah, about 63% was the dump. Now, we've already recovered significantly. So let's give some credit here to the Jesus coin community. They've already pumped it back up 70% or so from that low that we hit earlier today. Now, this is meme coin trading right here for you, right? Down 60%, back up 70%. Have we recovered back to all-time highs? No, but it shows you the volatility that you're going to get when you play with memes. Now, as far as the joke that I made before I fired up the show, you know, Bitcoin being a meme coin, Jesus coin being a meme coin, yeah, they are meme coins with very passionate communities. There's not any utility here. There is no fundamentals other than a very passionate community. Now, when I looked at this coin a week ago, the volume was very low. And you guys got to understand where I come from. I'm not here to do a pump and dump. I will never, and whenever I've done a coin review, most of the time I don't own the coin. Or like when I reviewed Reaper coin a couple years ago, I bought the coin after I did a public interview with the CEO of Reaper Financial, Patrick Riley, and I aired that interview for my whole audience to see. I don't buy a meme, do a pump video. That's just ridiculous. And that's how, you know, you end up in trouble too. But I don't do any of that crap. And then when I went to go buy, I had a little bit of Ethereum sitting in a wallet, and I thought, okay, what the heck? I'll go buy a coin just to, you know, show them some support. I didn't even have, you know, I had to buy $100 worth of Ethereum to pay gas fees on a free NFT I was trying to receive. So that's why I had some free, you know, some extra Ethereum sitting around. I went to go buy some Jesus coin because I was like, what the heck? I'll give them a little bit of support just to say that I own it. It'd be the first ever meme coin I've ever bought. Besides Doge. Actually, I did trade out of Doge. But when I saw the gas fees were $20, I just refused. That's just wrong. I won't partake. And then when I checked today, the gas fees were down to about $12, but still, I figured, nah, I'm gonna do a review on it. I'm gonna talk about it, and that's it. I'm not gonna buy this coin, but I am gonna put out a warning. These meme coins, I don't stand in the way of the bulls. And especially with these memes, I don't try to short them. I don't try to play around with them. And you have to understand, somebody's already taken massive profit. When you look at this coin, the guy behind it, apparently, I guess he says that he put away the keys to a large portion of the supply. That's the story that's being told. I don't invest in those types of narratives. I don't really get behind that stuff. But if someone can confirm it, I'm not smart enough to go check on chain and to read the Ethereum contract and to actually see if that's been verified. So if somebody can do that in the Jesus Coin community, I'd be happy to take a look at that and, change my stance on that one specific point. But all I'm going to say about this coin, and along with all the other meme coins, is that if you get a passionate community, these things can run up massively, and that's what we're seeing right now. And you just have to understand that you're going to get caught holding a bag. Now, if you want to hold a bag to send a message, to make a meme, then you can do that, but that doesn't mean you're going to make money. And I don't like getting into stuff like this where the only utility is I buy a bag and sell it to somebody else at a higher price and I make some money. Or I buy the coin to make a message, to make a stance. That's for me why I buy my silver. That's why I buy my XRP, is to make a stand there, but also with the additional utility, real adoption, and real partnerships that we see taking place over there. When I look at these memes, I don't play this game. I God bless everybody that does. Sure, have some fun, go gamble if that's where you get your kicks off with. But just remain very careful, okay? But the running joke for me is that you look, why what's stopping Bitcoin from pumping? What's stopping Jesus Coin here from pumping? These are both meme coins, relatively speaking, with no utility. And if the community's passionate enough, if they can get the good word out, they can send it up. But I would remain cautious for our community. I would caution anyone who considers trading memes right now when we're in the middle of a liquidity crisis that's going on. We're seeing banks collapse. And in the middle of all this chaos and carnage, God bless the people that still are trading meme coins. That's pretty funny to me. And I'm going to show you guys right here, the meme stocks and the meme community has a significant power. We're seeing the stocks pump. And so, I did pull up the chart here. Your Jesus Coin is back up. And I guess we'll be watching that one. I've added it to my list. Okay. But let's take a look at this. So this is the guy, Maker Lee. He says someone sold 500,000 worth of Jesus and it's only down 10%. So the Jesus community showing strength, buying the dip, and they have already ran it back up significantly. Continuing on, you're going to see this article right here from Bloomberg. Meme stock crowd plows into cross-asset rally lifting risky bets. And so we're kind of seeing this across the board. Tesla, Amazon, Nvidia, and crypto remains the group's top picks. Retail investors are the most bullish since July, and this is a new survey that just came out, and we're seeing a rally across all asset classes powering the S&P 500 to its best month in over a year, has finally caught the attention of retail investors. The same traders who created the so-called meme stock mania with big bets on speculative companies are back, and they are piling into the market's favorite stocks. Think Amazon, think Nvidia, while also buying riskier bets like profitless tech and all things crypto. Jesus Coin having its day as well. According to data from investing platform eToro and chatter on social media, the same platforms used to fuel a surge in GameStop more than 2 years ago. Individual investors are showing optimism and buying into a rally after a few weeks of economic indicators bolstered overall sentiment, said Jason Goldford, founder and senior analyst of Sundial Capital Research by phone. Now, what the retail investor sees is they see these prices going up without actually understanding the details of the economic data that's being manipulated, that's being twisted, that's being perverted to feed into this rally. What I mean by that is Main Street's bleeding out. Main Street economy is in contraction while they're reporting GDP growth, while you're seeing stocks up. And this is all that the bulls focus on. And there are some within the meme coin community that understand. And this is the best part about the meme coin movement. I will say this, is that it's gotten a lot of people introduced to investing. And so at the very bare minimum, if they start with meme coins, if they start with Bitcoin, well, at least that's a start. And they're trying to learn. And then you come to find out how short these hedge funds have gone on some of these companies, on some of these precious metals like silver. And to get out of these positions, what they're going to have to do is buy hundreds of millions, billions of dollars worth of shares and positions in precious metals like silver. And this is what's going to end up driving these assets even higher. Now, the rally's already started, and you can see this one right here. With less than 1 month to go, here's how the largest American-listed stocks have performed so far in 2023. Now, you can see here, Apple's up 47%, Microsoft 56%, Google 49%, Amazon 75%, Nvidia 220%, with Facebook's Meta 169%, and Tesla 93%. These are your magnificent seven, right? Making up the most of the gains for the S&P 500, while the rest of them are not as strong. But you are seeing companies like Berkshire up 15%, Visa 23%, Taiwan Semiconductors 32%. So significant strength in some of these stocks. MasterCard up 19.2%. That is a Ripple partner. Interesting. You're seeing other companies up like Adobe 82%, Salesforce 96%. Okay, that's good. But how much longer will it last with Intel up 65%? This is what I'm warning about, is that this is the last gasp of air before we start to see a correction, before we get black swan. And there are dozens of black swan scenarios. I'm not going to run through them. There's literally dozens that play out between now and our election next year that can bring us back down. The ongoing liquidity crisis, as I'm about to show you, in the reverse repo market. This is what I see that a lot of the meme coin traders don't even understand and have no idea what's coming down the way, as far as the blind bulls who just see the stock market rally going up. They're believing the CNBC talking head pundits that say that the Fed's won the fight against inflation. Everything's good. I'm about to show you guys a tweet from Joe Biden saying that inflation was 0%. Literally, Joe Biden, official account of our president here in the United States, saying that inflation is 0%. That's what the masses are being primed with. They're being led to their own demise. And this is why I'm remaining cautious, even though I love to see our crypto pumping, even though I love to see folks making some money. We have to understand where we're at in the cycle. And so this is where we sit down, we take a look at our portfolio. You need to have an exit strategy for all of your positions. If you've picked up some of these stocks, you picked up some of these memes, if you're doing a little crypto trade, understand where we're at in this cycle. Now, Shellfish, I see you there, 15 spot. We'll only make deals with utility. We live in a world run by a prince of darkness. With knowledge, we can bring light to lift the veils for those who have the eyes to see. Perfectly said, Shellfish. Thank you so much. Thank you so much. Great comment. 100%. 100%. Now, this is the insiders getting out. This is the joke that we're seeing here on the world stage today, as we see this report here from Bloomberg. Exxon among 50 oil producers in controversial climate pact at COP28. So COP28 taking place in Dubai right now. And what was hilarious to see is that the private jets were stuck there in Germany, as Germany just got hit with its largest amount of snowfall that I think it's ever had in December in one day or something like that. Just a record snowstorm that hit Germany. And so these guys weren't able to hop on the PJ and make it down to COP28. But see, they're just going to turn this and then they'll say that this is the climate change, right? Because it's no longer global warming. Now it's climate change. And I would say watch out for that. I was just doing a Discord weekly call this morning with my private community talking about how we're in black swan season. And I hadn't even seen the news this morning that came out that there was just a record earthquake that just struck the Philippines, and now Japan's getting tsunami warnings. And so the climate activity is going to continue. Whether this deal is doing anything, this deal's a hot load of you-know-what, in my opinion. And it's a joke, and they're using this as marketing while the insiders are dumping and heading to their bunker. What am I talking about? Well, that same Exxon that's sending their CEO to COP, and you're seeing, this is such, it's an absolute joke. These big oil companies are now the ones, and they got the most money, so now they can do all these initiatives, and now they can get on the climate bandwagon, and they can buy a bunch of carbon credits, and now they get to be the ones to save the world. That's how they're pitching this. But what is it giving an opportunity for the insiders to do? To dump their entire stake of ExxonMobil shares. And that would be board of director member Jeffrey Ubben dumping his entire stake, worth $216 million, in ExxonMobil insider trading alert. We've been talking about Jeff Bezos dumping. We've been talking about all of these insiders like Jamie Dimon dumping his shares of JP Morgan Chase for the first time ever. Now you're seeing ExxonMobil. You're seeing all of the insiders get out. And I absolutely love this. They go to virtual signal at their little COP climate change conference. Meanwhile, the board of directors are dumping their entire stake on the doofus morons that think that these guys are going to accomplish anything. And this is a trend that we're seeing, that we're watching very closely. And this is the data that we need to take a look at right now. Many folks don't understand what this is. I'm going to make it very simple for you to understand. The reverse repo market is short-term lending between the banking system on the back end. The Fed helps facilitate it, and it's a bunch of short-term loans so that the banks can cover their butts when they're doing their trading back and forth amongst each other, moving money back and forth amongst the banks. When they have little shortfalls, they can go to this reverse repo market. They can tap into it so they can cover their butts. That's what the reverse repo market is, and I'm going to explain to you why it's so important and why it confirms that the liquidity crisis is not over. In fact, it's about to pick up here once again. The butcher of Wall Street, Marcel Kalanovic. Reverse repo operations today fell over 100 billion. This was in the last 24 hours, folks. Money market mutual funds and banks use the reverse repo to stash cash in highly liquid U.S. Treasury notes. This allows them to receive the Fed funds rate plus 0.05% APR in overnight loans in exchange for T-bills and do the opposite the following day. The Fed has implemented new increased initial margin requirements that have raised the minimum capital level requirements for America's top financial institutions. So you got to have a little bit more collateral, a little bit more capital on hand these days, i.e. why the small regional banks have already been going bust. As liquidity is sucked out of the system by the reverse repo market, this leaves banks with less capital with which to meet margin collateral requirements. This has the potential to cause a fire sale of assets should the banks be margin called by the DTCC, the OCC, the NCC, etc., and or the hedge funds and family offices to which said banks lend shares and cash to be margin called by their prime broker. We are seeing the beginnings of a liquidity crisis. Meanwhile, the Fed has only unwound 10% of their balance sheet, valued over $2.7 trillion. That's just on their mortgage-backed securities. A housing correction has begun as new home sale prices are down 20% year over year. Existing home sale numbers have collapsed to 2009 levels, and existing home supply has just begun to increase. Banks have a massive amount of residential and commercial mortgage-backed securities. This is debt on real estate to residential and commercial. And it's now at a value, the value that is at risk for the top 4 U.S. banks is over $719 billion. Now, folks, you have to add this $719 billion of value at risk to the $684 billion of unrealized losses that all of these banks have on their bonds. Remember, Bank of America, $131 billion of unrealized losses on their bonds. I wonder how much value is at risk on their mortgage-backed security portfolio as well, right? Hundreds of billions of bad debt, of toxic assets, of unrealized losses. And meanwhile, Goldman has 45% of their deposits uninsured by the FDIC, and JP Morgan has 55% of theirs uninsured. They're all betting on a federally funded bailout with your money in the face of the possibility of the worst recession and stagflation this country has ever seen due to the Ponzi scheme that is exacerbated by the record level of C-19 money printing, bailouts given to institutions in 2020 in response to the collapse of the reverse repo market in September 19th of 2019. Guys, the reverse repo market was already starting to break in 2019. I remember covering it like it was yesterday. I remember listening to Robert Kiyosaki talk about it, talk about how the banking system was already going bust. And then sure enough, just a few months later, that's when the events of March 2020 hit us. And the Fed got their excuse to take rates back to zero and to unleash trillions of dollars of liquidity into the system. Now, the Fed had to take over the repo operations to prevent a full-blown stock market collapse at the time. These are the death throes of a monetary system Ponzi scheme that will have an inevitable impact on the global economy and all of our finances, even if invisible at first glance, much like the inflation of the last 2 years. The silver lining? Heavily shorted stock funds and precious metals tend to rocket in times like this. And you're already seeing it for gold, silver, and some of these other companies too. Even GameStop and AMC had a big rally last month as well. Now, this is what we're seeing. And to put this into perspective, back to 2008, so critical. When we look at all these data points that take us back to 2008, to take us back to the dot-com bubble of 2001, same signals that were flashing right before 1987 market crash, same indicators that are warning us before the 1930s Great Depression. But let's just go look at the reverse repo and what it was doing during 2007, 2008. This is a key data point, folks. This chart right here, right up in here, is what the reverse repo was doing back in March of 2008. It basically flatlined at 26 billion. Now, you need to compare this to the reverse repo market of today. Oh, wait, let me add this symbol real quick. This is the reverse repo market today. And you're going to see something very interesting. Let me zoom out on this chart. Let me just go to the monthly time frame to show you what we're talking about. Right here, folks. Your overnight reverse repo purchase agreements, the reverse repo market, went to almost 2.6 trillion. Now consider that. 2.6 trillion is what we were just at earlier this year, right towards the end of last year. We got up over 2 trillion, and that was back in May of last year. May of last year, we break over 2 trillion for the reverse repo. And then basically at the new year point, that is when we topped out at almost 2.6 trillion. So back in 2008, we were at 26 billion. Now we find ourselves, this time around, we got up to 2.6 trillion. So 100 times bigger. So take a look at what happened here in 2008. It flatlined at 26 billion all throughout this year. And in March of 2008, it went from 3.75 billion to the peak of 26 billion. Then in December of 2008, it plummeted to 180 million. It got completely cleaned out because the banks needed to cover their butts. So they tapped into this, and it went from 26 billion down to 180 million. So the market started crashing bad in October of 2008, and the reverse repo held up for approximately 2 more months before it got cleaned out. Now, we compare that to the chart that we're looking at right now. We were at 2.6 trillion December of 2022. And then as we started off this year, the banking crisis hit in March, and that's when we started to fall off a cliff here. And now we find ourselves below a trillion at 768 billion in our reverse repo. And we just got taken for another 100 billion yesterday. So consider that. We got this market all the way up, or this fund was all the way up to 26 billion in 2008 total. We just cleaned out 100 billion yesterday. That's the scale that the liquidity crisis is now at this time around. So this time is different? Yeah. This time it's much bigger. This time it's much worse. This time it's not just real estate. And so yes, we are seeing a bull run begin for cryptocurrencies are already moving. Some of the stocks have done incredible. But the same thing happened during the final moments of life, the final gasp of air that the market got right before we came crashing back down. And we can see that with the Fed funds rate, what the Fed has done with the interest rates. Back here, remember, in 2004, we were back at basically 1%. And then they took us all the way up to about 5%. And that led to the Great Financial Crisis all the way here in July 07, all the way through the second half of 2007 is when we had started to cut rates. And by the time the system had gone bust, right, in 08, 09, that's where they had to take it back down to zero. But the system was already bleeding out. They had to keep rates at zero from 2009 all the way through 2015. And then basically after Trump got elected is when they started to raise rates again. And funny enough, when the Fed raised rates to 2.5%, basically just over 2%, that's when we had the reverse repo market start to go bust there too, shortly thereafter in September. And then they took the rates all the way back to zero, sure enough, after March of 2020 happened. And then in April, the Fed took the rates back to zero. It spurred another mania. It spurred another rally. That's what took us to 69K Bitcoin. That's what took us to $500 Nvidia. That's what takes us to where we're at in the timeline right now. But what is happening? The Fed funds rate is plateauing. They've paused interest rate increases. Okay. Is the Fed going to raise rates at the meeting here in December? Probably not. Okay. So the market's getting its final gasp of air. If you go back and look at what the market did when the Fed plateaued rates there in 06, 07, that was the final moments of life. That was the final moments of the rally, of the real estate rally, of the stock market rally, right before mass correction, 48% correction for the S&P 500, went down by almost 50%. Our real estate market, one of the biggest corrections that we've ever had in it. Now, the same thing is happening. It's on a bigger scale. That's what makes it different, is that it's a bigger bubble this time around. And this is why we've gone to even higher prices and valuations in our stocks, in our equities, and in our real estate. So, although the bull run has begun for cryptocurrencies, that's undeniable. The rally's been incredible for Bitcoin, up 140% just since November of last year. In 1 year, we've gone up over 140%. The performance of Bitcoin in the stocks this year has been incredible. But I'm still remaining cautious because I'm looking at a liquidity crisis that hasn't gone away. I'm looking at a liquidity crisis that is getting worse again. And I'm looking for a Fed that is desperate for an excuse to cut rates again and turn back on the money printer again so that they can paper over this crisis and paper over the situation and make everyone feel warm and fuzzy inside again as we go to have another election cycle here in the United States once again. Now, this is the narrative that the masses are getting primed with. President Biden, his official account. Inflation was 0% last month and our economy grew by more than 5% last quarter. Bidenomics. Now, sure enough, readers have added context they thought people might want to know. That's right. Our own president just got community notes on Twitter. This tweet is referring to the PC index, which is a percentage change from the preceding month, which was 0. So month to month, the preferred inflation gauge, right, the PCE was was no change from month to month. But if you look over the course of the year, then yes, it is still at 3% inflation. And a more commonly referenced inflation index is the CPI, which shows an annual inflation at 3.2%. And so even when you use their core CPI, strips out the necessities, you're still at well above the 2% target, and you're still well above a 0% talking head point that President Biden tried to share with us. He tried to slip that one in. Nice try, Joe. We're going to have to community notice you, or whoever is running his account. And so this is what I'm talking about here with the masses getting primed. The masses have no clue. They see the stocks going back up. They're happy as a clam to go buy their bond for 4 or 5%, right? Because the United States can never go broke. The United States will never default. What they miss is the fact that the United States, the only way that we're going to be able to pay back these liabilities is massive money printing. We're going to have to cut rates again. We're going to have to turn back on the money printer once again. So, okay, you think that you're making 5%? What is real inflation at? That's what you need to consider when you think that you're just taking it to the bank with your 5% return on your bonds when real inflation is 10% or much worse. Now, into the crypto update. Not Tiger Global shares this. Imagine, and he's talking about what's happening now with Binance. Now that Binance has paid their $4 billion in fines, they are now going to have a compliance monitor from the Department of Justice or Treasury that will be installed and monitoring everything that they're doing. So, excuse me. He says, imagine if Tether is eventually required to have a compliance monitor installed in the same way that Binance was. So you will no longer be offboarding every illicit customer using USDT. Tether is required to modify terms of service to include easy fiat redemptions and can't reserve the right to redeem. Must match every minted USDT with dollars or equivalents wired into a bank account. Just imagine the federal colonoscopy Tether would have to endure. This is the main caution that I'm bringing to the crypto community right now. Right, the ongoing liquidity crisis that I was just talking about with the banks, that's bad. How does it come back to the cryptocurrency space? Is stablecoins. We still don't have legislation. You're still seeing massive amounts of Tether being printed, and that's the main point that I'm watching. The vulnerability point for the cryptocurrency space is Tether, is these stablecoins. And so I'm going to continue to watch that. Binance just settled up. Now they have a compliance monitor. And now that they're coming into compliance, their volume has gone from about 15, 16 billion daily down to about 5 billion daily. So significant correction taking place. Excuse me. Significant correction taking place over there with Binance now that they have the compliance monitor installed and approving all of the trades and movements that are taking place over there at Binance. If the same thing's going to happen to Tether and Tether's going to be able to come into compliance, maybe they'll still live. Maybe they'll still live another day. But how is that business going to be affected? That's going to be the interesting thing to see. Now, the BlackRock ETF you're seeing is just one of many ETFs. But to highlight the point here, BlackRock ETF's approval record with the SEC is 575 to 1. So they've only lost one time on their ETF approval. And the point remains, guys, why part of the reason why crypto has already started to run up is institutional smart money, family offices, high net worth individuals are seeing the writing on the wall, and they're starting to front run the move for Bitcoin, Ethereum, and the overall cryptocurrency space. Even XRP. XRP already has exchange traded products live in the Europe area right now. So you're seeing it without a doubt. And this is why we've been talking about dollar cost averaging over the past couple years into our fundamental positions, but we've been remaining cautious. The bull run's back on. That's fine. Our bags are packed. Let's go on a trip. And that's where we're at right now in this cycle. The ETFs are set to get approved. Watch for the buy the rumor, sell the news when this finally does get approved in January. And I just am watching out for the black swan catalysts, the liquidity crisis events, the further bankruptcies, the further defaults that'll be happening throughout the next few months. Specifically between now and March is a black swan season for me. So watch out very closely, remain cautious, but understand that this is inevitable and the run-up is underway. The institutions are coming in and they are choosing Ripple primarily, along with a few other cryptocurrency companies. There's a few exciting plays to be made here, but I wanted to play this clip right here on why Ripple is the partner of choice for leading financial institutions. Pagah Soltani, who is the head of payments products at Ripple, giving a little insight into the culture at Ripple, speaking alongside Google and NASA at this conference right here. Crypto for the Culture took place on November 9th, 2023. Let's take a listen in here on this one.
Love it, love it, love it. Can you share some insights on why Ripple is considered the partner of choice for leading financial institutions that are seeking to transform payments with blockchain?
Thanks, Lisa. And Chris left with a bang. Love that final answer there. To get back to your question, at Ripple, like from day one, we've been focused on the enterprise, which is pretty unique in the crypto space. So we have more than a decade of experience serving leading financial institutions, and it's part of our DNA to bring crypto tech to them in a way that works for them. So what do they need? They need compliant technology, they need security, they need scalability in the products that are offered, and we have a ton of experience doing that. The other thing is crypto can be unnecessarily hard if you're not in crypto. There's a lot of jargon, industry-specific words that almost act as this barrier to entry. It's like a new language. It's not that the concept's hard, it's just the language is hard. And we really work on simplifying all that and focusing on the user experience of what they want. And then the last part is it's best to work with a company that can give you multiple services or products so that you can build the use case you need to. And that's where we're a one-stop shop. So it's for payments, it's for custody or liquidity or other services that you need to build your crypto-enabled use case.
Love it, love it, love it.
And the key thing that I'm picking up on is now they're really pushing the one-stop shop for payments, liquidity, and custody. So now after the acquisition of Medico, you're seeing that they've kind of really been pushing that one-stop shop for liquidity after they merged basically RippleNet with on-demand liquidity into Ripple Payments. So now it's no longer RippleNet, it's no longer on-demand liquidity, it's just simply Ripple Payments. And they have the liquidity hub part of that as well, along with tying in their on-demand liquidity flows into the DEX on the XRPL. This is what actually starts to move XRP. And what's exciting too is now they're really pushing that custody solution as well, which I think was kind of the missing link here, missing piece for institutions trying to get exposure, is they just didn't have, one, the laws, legal clarity or understanding, but they also didn't have a custody solution either. Now it's clear. The only thing that's not clear is the options contracts and the investment options that they've given to other institutions. Those sales were ruled as security. So will Ripple be able to do options contracts to institutions going forward? I'm sure they will. It's just a matter of how that needs to be done. Do they need to put a broker dealer in the middle? Does it need to be a registered transaction with somebody, go through the hoops or do the deal? Probably. But at the end of the day, if an institution wants to get exposure to XRP, now they can, right, go to Ripple and they can say, yes, we do want to pick some up. Now they know that they just need to put a middleman in between, a broker, not a broker dealer necessarily, but an exchange. The programmatic sales were ruled to not be a security. So there just needs to be somebody in between, and it needs to be a straight transaction, XRP for US dollars, XRP for euro. That is not an investment contract securities offering. So many folks are twisting it. They think that just because Judge Torres ruled that some of the institutional sales were a security, that Ripple can't get XRP into the hands of institutions right now. That's not true. The institutions can pick up XRP, they just can't go directly to Ripple right now. And then what's going to be determined is how they can structure those deals in a way that doesn't constitute an investment contract securities offering. That's it. But institutions that want to front run, smart money that wants to front run, well, what are they doing? We're seeing the whale transactions. They've been picking up huge amounts of XRP. We've been seeing Bitcoin whales scooping up big amounts. And then you're seeing the rally right now in anticipation of the Fed pivot, I think is going to get lots of folks caught off guard as the liquidity crisis continues into next year and a broader recession kind of is accepted. We're going to get pullbacks along the way. But the problem is that we're in a massive cycle of stagflation where although even if demand falls off, prices can still go up. That's the definition of stagflation. Inflation is prices going up because demand's going up. And deflation is prices going down, demand's falling off. Stagflation is the worst case scenario because even though demand's falling off, i.e. we're entering into recession, our economy is in contraction, prices still go up because they've printed so much damn money. There's so much money in the system, so much liquidity seeking alternatives like Bitcoin, like gold, silver, XRP, that prices are still going up. Real estate. This is why you're seeing that real estate is still going up in so many markets. Residential suburbs outside of the cities are still pumping 10% or more in some of these suburbs. And it's because there's so many dollars still within the system, even though demand is getting tighter. You're seeing mortgage demand has fallen to levels that we haven't seen since 1994. You're seeing that the median sales price of a new home has fallen 20% year over year. These are not good data points, but this is the problem: is how much are we going to see prices correct or come down? Maybe not all that much. Maybe we won't get a 50% crash, right? But we're going to be looking at maybe a 10 to 20% correction, because there's still a lack of quality housing in good neighborhoods. That's the big, dynamic at play for real estate. When you look at certain sectors and segments of commercial real estate, though, you're seeing the corrections already well underway. 50%, 60% price reductions, and an absolute crash in some commercial sectors and some cities. So the problem that we're going to see for the average middle-class American, or someone who's even poor, who's trying to make it, who's trying to turn things around, is this period of stagflation keeps them out of the asset class, the ownership class. They're not going to be able to afford to buy these assets on the pullbacks, because they're going to be tapped out just paying for the food and the essentials that they want to strip out of the CPI data. So although we're in a macro cycle that takes us back up probably, and they are waiting for the excuse to be able to cut rates, turn back on the printer, the pullbacks that we'll see are what I'm waiting for. That's when I'm going to make my move. But for many folks, right, we only have so much left here, me, myself included. Yeah, I don't have M's in the bank account that I'm going to get to allocate towards private equity, towards real estate, towards XRP and other cryptocurrencies. I just have my little bag that I've been working my butt off to be able to save up towards, and I've been remaining patient. And even though I see the market's been pumping for some of these stocks, even the S&P having its best month last month, the NASDAQ having its best month in a couple years, I still am not going to FOMO into these stocks. I'm not going to FOMO into that crap. I'm not going to FOMO into Bitcoin. Even though I do see a run up, for me, I'm in a plays that are, a little bit more riskier, but have significant more upside potential. When you compare the returns, I think that could be coming for XRP and some of these other cryptocurrencies, this bull run compared to the Bitcoins and the Ethereums, I think the XRP will definitely outperform. And so that's why I've maintain my position over there. I'm not playing around with meme coins, as I gave you guys a little update on the Jesus coin. I don't own any. I'm not going to buy any, because right now is not a time that I'm playing around with memes. I don't own any NFTs other than the ones that I tried to receive for free, but I had to pay $100 in Ethereum gas fees. That's all I've done for NFTs. I'm not playing around with my money. I'm not going to the casino, even though I do like to sit down at the craps table and lose a little money and have myself an adult beverage. I think that's fun. I'm not doing that right now. Absolutely not. So I'm stacking my silver. That's the most recent move that I've made lately, is I stacked more silver. My cash is on the sideline for real estate. My cash is on the sideline for private equity. When it comes to cryptocurrencies, my bags are mostly already packed. I'm not diversifying all that much yet. And I'm going to be waiting for the pullback that I see coming sometime in the next few months that could hit pretty hard for the digital assets, that could hit pretty hard for the private equity. And that's what I'm going to be looking, just like we saw last week. This last week, Ripple shares on Link2 went from $50 per share down to $40 per share. And I'll pull up the prices right now, and I'll get an updated price for you guys real quick. Arcadius, I appreciate the 27. Two of the most hated people on planet Earth now are the politicians and the media. They're trying to divide us. They're lying to us. They're not as powerful and influential as they think they are. We get it now. F them. Arcadius, 100%, brother. And this is where it's at for me. Is our community staying locked in? And I was talking to the Discord group this morning. We're still trying to save people. The train has left the station, just like Rosie Rio said. We're still reaching our hand out and trying to pull folks aboard with us. but the train's already left the station. It's already moving. We're starting to accelerate and pick up speed. And what am I talking about? I'm talking about how much longer do we have for XRP under $1? I don't think that long. I've seen that there's already calls for XRP to go above $1 between now and the beginning of the new year. I'm not going to hold my breath, but I'm also not going to be on the sidelines. My bag's already packed for XRP. You guys already know that. I'm looking at some other positions right now. I'll let you guys know as I update my portfolio. But what I'm looking at right now that gets exciting for me is these private equity deals. If the equities and the stocks are going to correct, then the private market's going to correct. Wow, folks. See, our community is probably part of this because I know we've been talking about this over the last week. Guys, Link2 is now sold out of Ripple shares. This didn't last long. I was warning the community earlier this week when they dropped the price. It went from $50 per share down to $37 per share. Now, hopefully you guys were able to take advantage of that because right now they are sold out. They have no Ripple equity as of today. Wow. So that was about 1 week. Now, when you go to Link2, you can see you can buy some of our other favorites like Uphold, Circle, Link2, Glint, PolySign, some of these other companies, I Trust Capital, Discord, Chain Analysis, Ledger, Dapper. They got some interesting plays here. Carbon, BitPay. They got some interesting plays there. So if you want to get $500 towards your first investment, just use my link on down below for Link2 and take advantage of that and get your account ready to go so that the next time they have Ripple shares available, you can hit that buy button. This thing's moving quickly, folks. I mean, that's the thing about these private markets. The liquidity's not there and there's only so many shares available. So you go to a platform like Link2, you go to a platform like Equities In, there's a couple others as well, but there's only so many shares to go around, right? This is the problem. There's only so much XRP to go around. There's only so much silver to go around. You've already seen silver had a major deficit last year, a 230 million ounce deficit last year. India picked up 400 million ounces of silver last year. This is not a joke. This is not a game. Even though the meme coins are rallying, don't spend too much time making memes. We need to be stacking our money so that we can make our investments and be ready because we're still going to have big corrections. And that's because fundamentally the system's still breaking. The banking crisis is still here. The liquidity crisis is still here. There's still stablecoins that need to have regulations before we can know that crypto's actually building a real foundation. And in those pullbacks, in those bankruptcies, in companies going and defaulting, in countries defaulting, there's a massive opportunity at hand. So that's why I am still staying liquid right now. Arcadius, I appreciate you, brother. Huge shout out to the Canadians. Can't wait. We're going to be having our Vancouver meetup right along there with the Vancouver Resource Investment Community, the Vancouver Resource Investment Conference. That's going to be in January 21st and 22nd. It is free to attend that conference, by the way. If you want to get seating, then you have to pay for the VIP seating. But I believe it is free to attend the conference. So that's going to be the Vancouver Resource Investment Conference, January 21st and 22nd. And right before that, we're actually having another Discord meetup in Arizona. So back-to-back Discord meetups taking place. If you want to get tapped in with our Discord private community, just go to my website, zachrector.com, and you sign up through Patreon to get access to Discord. Take advantage of the special that I'm running right now through the end of the year. When you sign up for a 1-year membership, you're going to save 13% and talk to your accountant about being able to write off the cost as a business expense. So take advantage of that through the end of the year. We're running that special, 13% off your Patreon membership, and you get tapped in with our Discord group. We already have 3 Discord meetups that are planned for next year. And there's going to be more along with the additional educational content for investments, for wealth management, for business, and for real estate that we drop over there, along with our Discord weekly calls every single Saturday. We just had another one this morning. It's always a pleasure to get to talk to our community. So if you want to talk to me, you just hop on into the group, and you get direct access 24/7, I guess, except when I'm sleeping. but the community stays awake, stays alive. We have a worldwide community that's up 24/7, helping each other invest in digital assets and take advantage of the greatest transfer of wealth in world history. With that being said, guys, I got to run. We're going to go, we're having a little bit of fun with the family here today. So I do have to run, but I appreciate everyone for stopping by for this Saturday session. I may be dropping some more content later today too. We'll see. We'll see how early I get back. Maybe we'll run up another live show Saturday Night Live. But I appreciate everyone for stopping by here today. All of our community resources are at my website, ZachRector.com. And if you could do me a big favor, please smash that thumbs up, smash that like on the way out. Make sure you're subscribed up, hit that notification bell so you don't miss any of our content. And I will see you guys in the next one. We'll probably be doing a Twitter space tomorrow as well. So stay tuned for that. If you don't already follow me on X, we are over there. All of my links to my social media, the legitimate ones, so that you know you're not talking to a scammer, are going to be over at my website, ZachRector.com. Okay, stay safe, have a fun weekend, and I will see you guys in the next one. God bless.